we could be anywhere, where would it be?
We try to offer a roadmap to the Capital Markets Union. For us, it's very important to give substance to two important words, which are key words of this moment: harmonization and transparency. They are extremely linked from our point of view because both contribute to give a sense of trust and a sense of confidence to this market. And the capacity of this asset class to remain solid and give trust, we strongly believe that the European Commission should look at these two elements and try to find the right compromise. Finding the right compromise is the key word in Europe. And I think that this is the job of the ECBC, trying to put in the same room different perspectives, different nationality, and trying to find a compromise. And that was the hard work done on the transparency project. We think that transparency on the covered bond space is based on three pillars. Transparency on legislation. Investors should know exactly what are the legal requirements in a law. Transparency on liability side. So all the eyes in information should be visible on a common platform, on a common database. And thirdly, and even maybe more importantly, all the information on the asset side should be disclosed in a similar way. Well, this is the story of the covered bond label. We try to tackle all these three elements on transparency in the covered bond label. And this is a driver of convergence and harmonization. The task force moderated by Han did, I will use the word of the Label Advisory Council, so ECB, EBA, a fantastic job in trying to put in few months a common framework for asset side disclosure. We strongly believe that we have the responsibility and we have to be ambitious in try to implement this set of rules all together in Europe in the same way. And this is the plan of the ECBC. And there is the intention of the Label Committee to try to implement this outcome as soon as possible. Finding the right compromise is what will bring us into the future. And this is a bit the story of Capital Markets Union. Thank you, Han.
We launched the task force in October last year, and we work even through Christmas to be able to propose something in March. And yesterday we presented our outcome to the steering committee. We had really positive feedback, and we have the green light to now benchmark the template with issuers. And actually we are on a mission, which is to have this template implemented for the first quarter of next year. So I mean, why talk about transparency nowadays, and where do you really see some improvements which are needed?
You could say, but still, I mean, markets evolve, and the needs of the individual stakeholders evolve as well. And investor needs these days are just focused much more on the underlying transparency. And even though spreads are where they are and rates are where they are, and investors, in fact, don't really get paid for doing a whole lot of work on the underlying pools, the sort of experience from the last few days is, and years throughout the crisis is still there. And you also have additional regulatory requirements on investors to do more due diligence. So the need for transparency is there. With spreads being as low as they are right now, what the industry has to do, and I think that's what we're attempting as well, is to bring down the transaction costs of actually analyzing things. You as an industry need to make, or we as an industry need to make the analysis as cost efficient as possible, because otherwise people will just move elsewhere. So I guess the biggest challenge as far as transparency is concerned is, again, harmonize, make it easier accessible, make just costs of doing that due diligence come down. The amount of information that is there in most cases is sufficient for the covered bond purpose. What is not sufficient yet is, and again that's a recurring theme, and I don't know how many different conferences and roundtables and covered bond get-togethers, is you need to make the information more harmonized and easier sort of usable as well and accessible. That was there. Information has to be there quicker, ideally harmonized timing, so investors don't have to go to the individual issuer websites every single day hoping to find something. So you need more predictability on that end, and you need to be able to just compare better. So you're talking about more transparent definitions, you're talking about common templates and easy to use data types as well. That was a recurring theme. But loan by loan, just and wrapping that up then, and afterwards I'm done for the moment. Loan by loan was hardly ever requested by investors. And if you talk to a number of UK issuers, which are the only ones that have to publish that level of detail, they would most likely tell you that, yes, we do put it on our website, but the number of times it's been downloaded, well, we have to think whether we have to use two hands or one hand is enough already, but it's rather limited in terms of the demand from the investor side as far as that level of detail is concerned. The not needing loan by loan was predominantly for the most traditional asset types. The moment you start moving into more newer or less traditional asset classes, it becomes more relevant. But let's put it like that: the larger the individual items in a cover pool, the more relevant loan by loan becomes. So on an SME pool with I don't know how many thousand different individual loans, I'm not sure that the need for loan by loan is much bigger than it would be on a mortgage pool. But if you think about infrastructure assets, where individual sort of loan sizes that are in there are much bigger, and where therefore also the individual impact of a single asset is much bigger on the overall pool's performance, it becomes more of an issue.
Maybe give a few more examples, but first thing to say is we, as investors, very much welcome the work that the ECBC has done and the issuers and other interested parties. We've come a long way and we're in a pretty decent position. And I think progress going forward is more about details. And again, there's probably three main areas. The first one is the type of information in terms of, on the static side, I think we're okay. We would like to see a bit more information about kind of ratings, triggers, counterparty names, etc. In terms of uniformity across jurisdictions, I think we need to agree on a template. We've got kind of minimum standards from transparency, and then you get the kind of gold-plated standard from the kind of German model. I think we have to agree somewhere in the middle, agree on a template, and then populate that template. And again, accessibility is very important for investors. We need a kind of central location to access the information. We need kind of Excel files. And we also would prefer some form of historical data as well. So we've come a long way, and I think we're now looking at more the details and the minutiae, and I think we can push on. And I think the important thing is not so much for incumbent investors or investors like ourselves. It's more about broadening the investor base and making the kind of covered bond market for maybe US investors or whatever more transparent, less opaque, and more open to investing. So I think that's probably my comment would be, let's open the market up to more people, and that transparency really kicks in there.
So, I mean, how urgent is this harmonized template in a way? How much time do we have? Knowing as well that we have pressure from the regulatory side. I mean, Lars Overby from EBA at the IMN conference in London did mention that they would rather have an industry solution. But he didn't mention any time frame. But I mean, on your side as an investor.
Yeah, I think so. That we have divided the different items, and as and in my opinion, and because I think it's more or less the opinion of our issuers, we have to divide this process in two stages. In the first stage, which is the short run, and probably we can talk about next year, of course. What is important is to provide an information with a similar timing, the similar format, as Florian and Daniel say, this preferable workable format, Excel file, for example, and the content structure. That is why we are pursuing with these modifications. But in the second stage, and then for this maybe is in the medium run, I don't know, at the end. it depends, I don't know. Then we can just try to improve the national transparency by adding the glossary, which is, I think it's something that will be very welcome by investors and regulators. Also to provide historical data, which I think is also feasible, and we will arrive to this point, but I think in the medium term. And then, which is really a challenge, is to try to get an harmonized location. We have to study all the obstacles, which are, I think, in my opinion, legal obstacles, and they are not easy, and we have to study them and try to remove them. And I think this is the real challenge for the medium-long run.
I think it's a good thing from the initiative, from the market, to come up with such an initiative to prevent further regulation. The harmonization is a means, not a goal. Giving the nations and the different countries in Europe a lot of freedom, and this national transparency template is a good example, because you have still these differences, and not everything needs to be harmonized. So, and we try to give to basically come up with a glossary which allows the national transparency templates to take care of their current working systems and push for more harmonization, but not as a goal, but as a means. So,
either in terms of the items or the definition that one fits for all doesn't really work. I mean, Hélène, as Lorena was mentioning, you have had data out there for a while, which, you know, what kind of challenges have you faced and you still face, and how do you address it?
But we are in a better position than we were, and certainly some of the efforts we've made, you know, in collaboration with issuers have brought some successes. But as, again, the previous panelists have mentioned, it takes a very long time sometimes, because IT developments are not quick and are expensive, so you really want to be careful about the data you ask for. Yes, I think one of the harder one to solve in this market, if we talk about mortgages specifically, is that in some markets we have multiple mortgage loans for the same property. This is one issue, aggregating different loan parts secured by the same properties, and it gets even more complicated, I would say, sometimes in commercial real estate. In Germany, for instance, we see what we call the N-to-M, you know, there's an uneven number of loans, of borrowers, and of properties. So depending on how you look at it, do you want to look at it from the point of view of the borrower, or do you want to look at it from the point of view of the property? You have to aggregate things differently. And obviously, one national or one even very harmonized and very well-designed harmonized template needs those explanations in the glossary to tell you guys as investors or as market participants what was the aggregation which was performed.
and as an analyst, sometimes you had to be careful during the years that you were still used to complaining, and then you realize that you go back to the website and then you see, oh, they have everything. And now it's already in a standardized manner, and it's going even further. So I think there was a large progress happened already. And Spain, in my view, is one of the prime examples from where it's coming from and where it's now. There was a lot progress already, and with this initiative there should be more.
So, I mean, indeed, are we going to see anyway some national regulators asking for more? I mean, what angle do you think they will be taking? Although we do understand it's an early stage, but...
One of the areas of improvement to try to promote the publication of complete, transparent and homogeneous information. They don't, in the paper, the authorities didn't give any clue about what they were thinking. In fact, they asked about the subjects, the frequency, and the level of disaggregation, if it has to be on a loan-by-loan basis or on a lawyered basis. We answered that the legislation has to just follow CRR with the same frequency and with a level of disaggregation, which is the one that we are just now offering in our template.
You know, I've said at a previous event to regulators, you know, practice what you preach. I mean, these guys are, in that sense, the ones with by far the lowest level of transparency. Just think of HETA. Yes, covered bonds are excluded from the moratorium, fair enough. But beyond that, you don't really know anything. Yes, pool transparency is as such important, but having to rely on the underlying assets has become less relevant and less probable. While early intervention measures by regulators have just become much more realistic. At least, be transparent about it after you've intervened, and that hasn't been the case at all whatsoever. And you see so yes, transparency is important, but transparency also includes underlying legal rules, and not just primary legislation, but also secondary legislation, knowing what the exact rules are that govern a specific product, and how regulators want to take care of certain things and interpret their own responsibilities.
But I do agree. Yes, it would be better rather than a kind of blind trust into the regulator doing the right thing. In this case, there would be a bit more of a guidance on what will happen.
I mean, a common IT platform was mentioned during the morning. I mean, Markus, is that a dream, or can it really happen? And for it to happen, if it can, what do we need?
It is not a dream. It can happen. It really depends a little bit on the structural preconditions. Does an issuer operate a central covered bond IT, which makes fulfillment of new reporting tasks easier, or does an issuer has to consolidate data from many different core systems? Rating agencies, information is produced, information in an even, maybe an even wider range, as we have addressed in our task forces. From the technical side to manage these data, say at the ECBC platform, it is another task, and it should also be possible, at least in a first step approach, in a very short run. It should be possible, I think.
What do you think is key so that we succeed in what we're trying to do? And
what do we need to succeed? I think we have good prerequisite, which is it's a public initiative, and so it's getting enough attention. I think that's the to me that's the key to success on this. And this is bringing them together in one template, which would not do justice to each individual and particular case. So I think that's the main obstacle to overcome. There is a big push for something unified. It makes sense, makes everyone's life easier. So I think there are good chances of success for this.
Florian was mentioning that loan-by-loan data today in the UK is not really used. If we take the statistics which were shared by Luca yesterday on the covered bond label weight site, you have 2,000 visits per month. It's about 11,000 pages which are viewed per month. The average visit is 5 minutes in terms of time. You do have some interesting country differences. So the longest are Belgium. They stay for 10 minutes. And the shortest are the American, with 3 minutes 20 seconds. And if you look at what country are using the most the website, it's the UK, followed by Germany, and followed by France. And not far away you have Belgium. So there are maybe slower but active users as well.
If we could be anywhere, where would it be? Take what we need and disappear.